company in focus, BLS E-Services, has completed a major acquisition of Atyati Tech worth 157 crores. We will have Shikhar Aggarwal, the company's chairman, on the show in just a bit to talk about it, but just me joining in to set up that conversation.
Well, Tawana, thank you for that. As rightly said, the company has recently acquired Atyati Tech for rupees 157 crore rupees, and management sees a lot of synergies with this particular business. When they look at the overall driven, they expect that the overall AI-related banking solution business to grow well for the company, and also they state that the current synergies of the company would help them establish the last-mile banking solutions as well. Now, well, about Atyati Tech, it's an AI-driven banking solution company currently serving over 35 odd clients, and it's based out of Bangalore. Now, a bit to give you context about the company, FY26 revenue of the company saw a double-digit uptick, and so as the EBITDA saw a double-digit uptick, but the margins are something to watch out for, given they saw a slight dip in FY26. Now, while the management does state that they remain on track to achieve the goal of growing 20 to 25% ahead, but it's a wait and watch how this turns out. From the management, I would like to understand, after the recent run-up of the overall revenue, how do they expect that going forward? And second, the visa revenue sees an uptick of 11%, and how does that grow in the coming years?
Okay, Shikhar Aggarwal joining in, chairman of BLS E-Services. Shikhar, very good morning to you. Thank you for speaking with us. Tell us about Atyati Tech. Why the acquisition? What does it add?
So, as you know, BLS E-Services, last year did a revenue of around 1,100 crores and a profitability of 70 crores. And we have acquired a few companies over the last few years. Now, this acquisition of Atyati, which is a Bangalore-based AI-powered banking technology company, which is in the business of providing banking software to various banks, and also in the BC business. They have around 25,000 banking correspondents across India and doing a revenue of around 300 crores, including the technology revenue. And they are doing an EBITDA of 20 crores. So definitely there are a lot of synergies to our existing network of 49,000 BCs that BLS E-Services has. There will be synergies, cross-utilization, our expenses will come down. So definitely this will lead to an increase in revenue and profitability in the company. At the same time, BLS E-Services is majorly into PSU banks, the revenue is coming, whereas Atyati is majorly into other than SBI. So we will get a big entry into other public sector and private sector banks within India.
Okay. How would the exposure to SBI help you going further? Shikhar, if you can just elaborate on that point.
See, BLS E-Services is currently, running 49,000 BCs across India, out of which around 25,000 of SBIs. And this Atyati Technologies, that the company that we've acquired, is doing non-SBI BCs. So this helps us in expansion into non-SBI, other banks BCs across India. We have our existing network of 49,000 centers. If you add this, then there is economies of scale. We have offices existing in those cities across India. So definitely this will lead to reduction in expenses and increase in profitability of the company.
How revenue accretive will this be? Are there any numbers that you can share in terms of revenue and margin inputs coming in from Atyati Tech or opening up this space?
Yes. So I think most of the acquisitions, all of the acquisitions, in fact, that we have done are revenue accretive, EPS accretive from day one. Atyati Technology will add around 300 crores of revenue to the top line of BLS E-Services, as well as add around 20 crores to the bottom line of BLS E-Services, which is a start. Most of the acquisitions that we do is because we have synergies. We will be trying to cross-sell our existing services in the centers of Atyati Technology. That will lead to an increase in profitability of that company. We will synergize the expenses, etc. So definitely, I feel BLS E-Services, if you see the growth trajectory, March 2024, till today, we have grown at more than 50% year on year in terms of profitability. So with this acquisition also, we see the strong, steady growth happening in BLS E-Services.
Shikhar, good morning, Neeraj here. Quick question. You've had, by virtue of what you're doing right now with this or some of the others, you've had a fairly decent last 3 years growth rate, right? In fact, FY26 was, in some sense, a banner year for growth. Have the disruptions in the Middle East impacted business in any fashion, or is it business as usual? And therefore, does the growth rate continue in FY27 or FY26?
See, if you're talking about our parent company, BLS International, where we delivered around 723 crores of net profit, on consolidated level last year, definitely, as we said, from the day the company started, this related to geopolitical issues. Any issue happens anywhere in the world, there is small, effect. But on an annual basis, we have always seen that we have grown as a company. So we continue to remain, that we will continue to grow at 20 to 25% year on year. We are bidding for major contracts across India, globally. That we see if realization happens, then growth can be further.
But I was talking about the company which is BLS E-Services as well, right? Correct me if I'm wrong, but FY26 you did what, about 1100 crores versus 500 last year. So that's what I was referring to. Do you reckon this pace of growth in BLS E-Services continues? And what could the margins be? Because the margins came off quite substantially from whatever 12-13% to 7% in FY26. Does that stay stable now? I'm talking about BLS E-Services.
First of all, there is no impact of any geopolitical war
Fair
on BLS
call. Lovely. Lovely.
This is happening in India. Obviously, we have grown, the revenue has grown from 500 crore to 1100 crore because of acquisition of RDFILIS that we did. And that is, a loan aggregation business, which is at higher revenue and lesser margin. Definitely, we want to maintain the growth momentum of 20 to 25% BLS E-Services as well. But if there are major M&As or major new tenders that come in, growth could be further.
Okay, but on the margin front that Neeraj just raised, where in FY26 you've seen a dramatic falling off. It was in the double digits, it's fallen to 6-7%. Does that reverse, or is this the new normal, and have you hit your base?
See, as I said, that because of the acquisition of RDFILIS last year, that is, at only 3% margin, the business is lead generation, loan aggregation. That is the business. Because of that, the consolidated margin has fallen. So definitely, this is the base. Our target is to increase the margin from here, as we have increased in all our businesses through cross-selling of different services, through cost optimization. Even acquisition of RDFILIS will lead to Atyati will lead to an increase in margin.
Shikhar, of course, I'm not necessarily asking you for an exact value, but there must be something that you are aspiring to, a range for margins that you will build towards. What is possible in the remainder of FY27, and what is the aspirational value? When do you expect to hit it?
See, right now, it's very soon to comment on actual numbers. If you see on our visa business, I can give you that we were at a 20% margin, we grew 30%, and in our visa business, we are doing around 40% EBITDA margins. So in this business also, our target is to increase the margins. How much it will increase by what percentage, I cannot comment right now, but definitely we are making efforts to reduce the expenses and increase the cross-selling of services, increase per application revenue in this business as well.
Okay, thank you so much, Shikhar, for speaking with us today and joining in. Shikhar Aggarwal there on the new acquisition by BLS E-Services. Stock about 2% up as we're having that conversation.